would say we are now just moving into the high risk period of a recession.
Global markets have recently been rocked, with losses totaling $2.9 trillion as worries of a global recession grow. Stubborn inflation, decreasing consumer spending, and rising interest rates have all contributed to increased investor anxiety. The Federal Reserve's repeated interest rate hikes have stifled economic development, prompting investors to seek sanctuary in more stable assets. The continued inflation, despite forceful rate hikes, has only fueled concerns. Discussions about prospective interest rate reduction and the impending recession have sent shockwaves through the markets, increasing volatility and generating considerable setbacks. As a result, market prices have fallen, with investors taking a cautious approach in derivative markets to limit potential losses. Things are so bad that even Warren Buffett sells 50% of Apple holdings, and Berkshire Hathaway now holds a record $277 billion in cash. And when people like Warren Buffett are selling Apple stocks, you can imagine how bad things can be. Another tech giant is facing huge issues and losses, which is Intel.
Well, I think right now also you're seeing a fear amongst tech that we are seeing so much spend. We are seeing these companies announce CapEx spending, particularly on AI, of spending tens and tens of billions of dollars. And also I want to point out today there's a lot of attention being paid to Intel. Intel, I think, is a microcosm. I think this is a broken company. They are having a death spiral March 2000 moment in terms of their decline. It's certainly weighing on the Dow as a member of the Dow. But I think that is more of an isolated event because they have a lot of battles going on.
Question of the day, which everybody wants answered, is this slide going to continue from here on out?
Look, I think that it's no secret coming into an election, there's always going to be volatility. I personally didn't think the volatility was going to start until after Labor Day, so I think the volatility will continue. And as I said, investors should have a long-term shopping list.
Should they buy now? I mean, you've got
I would pick some spots. There are some things I would start to pick up. I have a shopping list of other things I'd like to see trade lower. So I think the answer is yes. I think it's okay to start tiptoeing into the water. I think Amazon, from a technical level, approaching 160 looks good. I think Made on more weakness. And one of my favorites, Goldman Sachs, I'd love to see probably buying that 20 or 25 points lower.
Now let's listen to Nancy again to understand how bad the situation is.
Well, you're starting to see the unemployment backdrop deteriorate. I know the level of the unemployment rate is low at 4.1%, but it is up. It's up from 3.4. It's on the verge of triggering the SOM rule. Second, unemployment claims we saw this morning, clearly higher. One of the things I do is I keep lists like you just showed, and there's a growing list of layoff announcements this week. Intel was at the top of it. And then the question is, why are companies doing that? And I listened to your previous guests, and we would say we are now just moving into the high risk period of a recession. It on average takes 10 quarters after a Fed tightening cycle to dip the economy into a recession. And so that way I agree with you. And this is now the 10th quarter. And I agree with you on that Wayfair comment. You are popping the stay-at-home bubble. Housing is experiencing a double dip. And so indeed, we think it could be a painful as we move into the fourth quarter is when our best guess of when a recession starts. So I would give the Fed an A in 2020. I might give them a C in 21 for not tightening quick enough as inflation accelerated. And I would give their cautiousness this year, I'd take them back up to a B. I think they have been right to be cautious. This has been the biggest inflation price increase we've seen since the back half of the 1960s. It was not just transitory. It was due to massive monetary fiscal stimulus. And I think the Fed has acted prudent in not cutting more aggressively, let alone cutting yesterday, given the risk, which I think is still a potential problem if we don't have a recession. We think we need a recession to get a sustained shift down in inflation, or we risk potentially going back into something like the early 1970s.
Wow.
Additionally, as stated earlier, stock markets plunged around the world on Friday amid widespread fears about a possible U.S. recession. Shock U.S. jobs figures and concern that the Federal Reserve has waited too long to cut interest rates sparked heavy selling on Wall Street, where the S&P 500 fell more than 2 PC. Misgivings about the health of the world's biggest economy triggered market slumps elsewhere, with the FTSE 100 closing down 1.3 PC in London. U.S. unemployment hit a 3-year high in July. New data released on Friday showed, prompting economists to warn that the central bank was once again behind the curve on interest rates. The US added just 114,000 jobs last month, according to the Bureau of Labor Statistics. This was down from 179,000 in June, and much lower than analysts' expectations. Unemployment rose from 4.1 PC to 4.3 PC, its highest level since October 2021. Stocks and crypto market have been volatile for days, and the figures triggered a renewed market rout. Stocks and bond yields fell, oil prices declined, and gold briefly surged above $2,500 for the first time, as investors hunted for safe havens for their cash. Talking specifically about Bitcoin's attempt at even a modest early rally during US trading hours, Friday was quickly snuffed out, the price dropping more than 5% in about the past 90 minutes, alongside a major slump in equity markets. A weak July US jobs report earlier Friday sent bond yields and the dollar plunging, the sort of action that often sends risk assets like stocks and Bitcoin into the green. But it's not the case today. Bitcoin managed a small gain to above $65,000 at one point, but has succumbed to the risk to off mood, tumbling back to $60,000 by now, or maybe it will be even lower while the video is uploaded. The broader crypto market is suffering even more, off just shy of 3%. Among those leading the way, lower are Ethereum, Solana, Uniswap, and Chainlink, each sporting declines of 10% to 15%. Setting the dour mood, even before the US jobs report, was a continuing plunge in Japan, where the Nikkei fell 5.8% on Friday, following a 4% decline a day earlier. The sell-off appears to be in response to the most minor of monetary tightening actions on Wednesday by the Bank of Japan, which lifted its benchmark lending rate to 0.25% from a previous range of 0% to 0.1%.
They think it's good. Who knows, maybe we'll pay off our $35 trillion, hand them a little crypto check, right? We'll hand them a little Bitcoin and wipe out our $35 trillion.
Trump also believes that things are very bad that he even had to say this. Trump's extreme Bitcoin plan comes after Tesla entrepreneur Elon Musk warned that the US currency is on its way to destruction and that the country's spiraling $35 trillion debt pile might bankrupt it. A scenario that some analysts believe could drive up the Bitcoin price. But now the question is, will Fed be cutting rates? As throughout this year, Federal Reserve Chair Jerome Powell has said he could see two scenarios that would warrant interest rate cuts. First, inflation could retreat, giving the US central bank confidence that it's slowed the economy enough. Second, the job market could start to weaken, sounding alarm bells within the Fed that it may need to stave off a bigger slowdown. Right now, both scenarios look like real possibilities. The Fed's preferred inflation measure is just half a percentage point above the Fed's 2% goal, while the unemployment rate has rapidly increased from a historic low. Meanwhile, in July, the share of Americans in the labor force who are jobless rose to 4.3%, the highest since October 2021, the latest Department of Labor data showed. The news comes 2 days after Chair Powell said Fed officials debated cutting interest rates in July, but thought they still had time to wait and see that inflation is back on track. If we do get the data that we hope, then a reduction in our policy rate could be on the table at the September meeting, the chief central banker said, after the latest Federal Open Market Committee, FOMC, meeting July 30th to 31. Inflation is probably a little farther from its target than employment, but the downside risks to the employment mandate are real now. The Fed's next scheduled opportunity to cut interest rates is over a month away, and investors are responding to the unexpected weakness with fears that the Fed made a mistake by holding interest rates steady. The S&P 500 dropped more than 2% throughout the trading day on Friday, while the Nasdaq dropped almost 3%. As the weaker data rolled in, the debate among economists over a September rate cut shifted from will they or won't they to how big will they go. Nationwide chief economist Kathy Bostjancic says, the across-to-the-board weakness in the July employment report further fuels the view that the Fed is late to easing monetary policy. And another economist, Capital Economics' Stephen Brown, says the Fed might debate cutting by 0.5 percentage point rather than 0.25 percentage point. Meanwhile, if future reports show more weakness, Fed officials may even debate raising borrowing costs at an emergency unscheduled move. So things are getting pretty bad, as there is a huge amount of panic in the markets. We will have to wait and see how and where the situation unfolds. And that's all for today. If you enjoyed this video, please give it a like, subscribe to our channel, and hit the notification bell so you don't miss any future updates. Thanks for watching, and stay tuned for more.